We're looking at question 6 of our practice exam, and it's the statement of financial position for Jerry Logistics. So we've been given a balance sheet, and we've been given some income details, and we've got some further information. It says during the financial year ended 30th of June 2011, interim dividends of $20,000 were declared and paid. A final dividend of $30,000 was declared. The original cost of equipment sold during the year was $68,000. Accumulated depreciation of the equipment sold was $43,000 at the time of sale, and ordinary shares were issued during the financial year. So that's going to help explain some of these movements up here and in here. It says prepare a fully classified statement of cash flows for Jerry Logistics for the year ended 30th of June. Show all necessary workings to derive your answer. Now we're going to use the direct method for trying to calculate this. Now the direct method means that we're going to use rebuilding accounts, because what we're trying to do is pick out in our accounts where the cash flow items have happened. So that's our first task to do. Now what I've done is I've generated the cash flow statement, so that's what the cash flow statement will look like. So that's what we're aiming to finish with. Now I'm going to try and find my receipts from customers, payments to suppliers, so on and so forth, all these items through here by rebuilding the cash flows through here. Okay, so let's get started. And the first thing I'm going to do is I'm going to look at my accounts receivable, because what I want to do is I want to try and find my cash flow from my sales. So let's go. So I'm just going to do this through T accounts, and my first is accounts receivable. I'll make that look at capital A. Accounts receivable. Now if I look at my accounts receivable, I know what my opening and my closing balances are. Now I just got to try and pick where my movements are. So I know it's a debit balance, so we start with $43,500. And this is my opening balance, and that's at the 1st of the 7th, 10. And on the 30th of the 6th, 11, I know my closing balance is going to be $76,500. So I've got $76,500 here. And what I need to now do is get some totals in here and work out what else goes through my accounts receivable balance. Well, what goes through my accounts receivable balance is my sales. So I look down here at my sales revenue. I'm going to tick that one off. And I'm going to put in what increases my sales. So sales for the year is $2,080,000. Now if I add these two figures together, I'll get 2,123,500, and that should be because we balance our accounts. So what I'll now do is I'll now be able to work out how much cash I received from my accounts receivable by doing the difference between my closing balance and my total movement. And that comes in at 2,047,000. So that item there is an item that I want to put through my cash flow, and it will become my receipts from my customers. Next account I want to rebuild will be my inventory, and I want to work out my inventory so that I can work out how much my purchases are, and then I can work out what my accounts payable is. So my inventory starts at opening balance was 63,810. 1st to the 7th, 10. And my closing balance at the 30th of the 6th, 11 was 72,000. 72,000 even. So now what goes through my inventory is my cost of goods sold, Now my cost of goods sold is a debit movement, so I know my inventory would reduce my inventory balance. So I'm going to put it here, cost of goods sold, and it's 1196500. 500. That'll give me a total of 1196500 will give me, that's 96, that's 68, 1268500. So it'll also make my balance on the other side 1268500, and I now couldn't work out what my purchases are. My purchases are the difference between this one and this one, and my difference is quickly 68, that makes 5, take it 4, 4, 6, 10, 4, 6, 90. Okay, 1, 2, 0, 4, 6, 90. I hope my brain's working well today. Alright, so that's my purchases, and my purchases I'll use now to help reconcile my accounts payable. Now, in the exam, you will be having to rebuild some of these accounts, and it will definitely be accounts receivable and definitely accounts payable, so that means you'll have to do an inventory as well. So my opening balance in my accounts payable, now that's liabilities are a credit balance, so on the 1st to the 7th, 10, my opening balance was 24,460. And my closing was 29,150, and that's on the 1st, no, that's on the 30th of the 6th, 1st of the 10th. Now what do I put through my accounts payable? Well, obviously my purchases. Now my purchases will increase my accounts payable, and that is for 1,204,690, which will give me 1,229 something or other, 1,229,150. So this side will be 1,229,150. So therefore my bank, so how much did I pay for my purchases this year, is the difference between these two figures, which will be 1,200,000. And that's another item that I'll be looking to put into my cash flow statement. So now once I've done my accounts payable, I can look at some of my other items here. Now let's have a look. We've got prepaid insurance, so let's work out what my cash flow through my insurance was. Because there will be a cash flow through this. And we start with an opening balance. Now it's an asset, so we start with an opening balance of 3,600. First of the 7th, 10, and on the 30th of the 6th, 11, we'll have a closing balance. And my closing balance is 5,300. Now what we'll go through here, or what will change my account, is any insurance expenses, and we have an insurance expense. So my insurance expense will obviously reduce my prepaid. So expense, I'm just going to put here, and my expense was 3,300. So that gives me a total here of 8,600. So that means my total here will be 8,600. And how much did we pay for insurance this year? Will be the difference between my opening balance and my carried balance of 5,000. And once again, I want to highlight that so I don't forget to put that into my cash flow statement. So I've got insurance. I'll do land in a minute and equipment in a minute. We'll do all those together. Let's have a look at what's interest payable, dividends payable. So let's just do interest payable first. because this is all my operating activities. So my interest payable account. Interest payable. Now, interest payable is obviously a liability, so the 1st to the 7th, 10. Opening balance is 7,600. And my closing is 4,600. And that's on the 30th of the 6th, 11. So what is my, what goes through my interest payable will be my interest expense. So that will obviously reduce my, so I've got 12,000 here. So my interest expense will obviously, increase my amount. So that makes 19,600. So we're looking here for 19,600. So what did I pay for in interest this year? Must be the difference between here and here, which will make 15,000. And again, I'm looking to put that amount into my cash flow statement for the year. Alright, so now I think I've pretty much ticked off all my operating, accounts receivable, inventory, accounts payable, prepaid insurance. They're my operating activities. I have an amount down here called other expenses, which I'll take as all being cash. So that's my other operating activity. I'll take that as being cash because it gives me no other information as to what I'm doing with my, we haven't got any prepaid expenses or other than insurance and these payables here. So I'm taking that as being a cash amount. Okay, we've ticked off cost of goods sold, we've got depreciation and loss of equipments here. So let's rebuild my equipment account. Now, my equipment's gone from 88 to 115, but I've also sold some equipment down here during the year. Let me slide that up a little so you can actually see. So we've got some equipment costs down here. So let's have a look at rebuilding my equipment account. So this will now be my investing section. So I've got my equipment. I'll slide this up so you can all get a look at it. Pardon me. Okay, so my equipment. My equipment has an opening balance of 88,000 and my equipment's a debit balance. 1st to the 7th, 10, opening. Where are we? 88,000. And I know my closing, 30th of the 6th, closing was 115. Now, we have this information. The original cost of equipment sold during the year was 68,000. So I can put in a sold, which will indicate that I've reduced my asset balance by a certain amount. And then we can work out what we've purchased or what's gone. So my purchase would be for cash. 68 plus 115 is 183. So I know that balance is 183. So that must mean my purchase of equipment for the year were 95,000.